Hi there. As you probably know, Rivian has reported the results for the last quarter, Q4, and for the full year 2023. And as you can see, year to date the stock price is down 27% and pre-market is expected to go down another 15%. So the stock price is going down a lot. Of course, if you look at the highest peak, that was in 2021, the stock price is down over 88%. And now the market cap is around 14 billion. By the way, you probably know that Rivian has 9.3 billion in cash. So that's quite a lot compared to their market cap. And as this industry is expected to grow more in the future, the electric cars are expected to go up, then Rivian has more opportunities ahead. But now, for the moment, they are doing quite bad. Because if you look at their quarterly production and quarterly deliveries, you can see that production went up, but the deliveries went down a little, from 15,000 to 13,000. So that's bad. Now, despite this decline, you may see that Rivian may be an opportunity at the current level. As the market cap is around 14 billion, they also have 9.3 billion in cash, and the upside that the EV industry will grow more in the future. So, in the short term, the stock price may do nothing, but in the long term, maybe Rivian will survive and will be able to make a profit. Now, before investing in this company, or if you are invested in this company, Rivian Automotive, you have to know some things. Their fundamentals. What they expect this year, 2024, and what's the future outlook of Rivian. Because if you don't understand those things, you won't be able to take advantage of those declines. The stock price may do nothing this year or next year, but maybe after 2 years, the stock price will rebound to $100 or even more. Of course, if that happens, then your return will be quite great, amazing. So let's look at the results. First of all, the most important indicator is the number of vehicles produced and delivered. As you can see, in the last year they produced of about 57,000 vehicles and they delivered over 50,000. So they doubled their production and deliveries from 2022. And that's good. Quite great to double the deliveries and production from 2022 to 2023. That's great. And also, if you look quarter over quarter from Q4 2023 to Q4 2022, you can see that was an increase of over 100% in their deliveries. So far, they are doing great. Plus, they are focusing on reducing costs. They improve their gross profits. Moreover, they announced a reduction in their workforce by approximately 10%, and that's great. They'll be able to survive and use their cash more efficiently. So, in the long term, if they continue this way to reduce their costs and increase their profits, their revenue, then the stock price will go up. Now, you also have to look at the revenue, how much money they are making. As you can see in the last quarter, Q4, they made of about 1.3 billion in revenue by delivering almost 14,000 vehicles. And for the full year, the revenue was about 4.4 billion. And they delivered 50,000 vehicles. Of course, this is one indicator. Another indicator is their profits. As you can see, they didn't succeed to make a profit in the last year, 2023. Their net loss was about 5.4 billion. However, this is an improvement compared to the last year when they had a loss of about 6.7 billion. So it seems that they get more efficient. And if they can succeed to reduce their costs and report a profit by delivering more vehicles, then the stock price may go up. Now, you also have to look at their expenditures, because as you can see, for the full year 2023, their capital expenditures, were about 1 billion, and compared to 2022, This is an improvement. They spend less than 2022, and that's great. And as you can see, and I said at the beginning, they have a lot of cash on hand of about 9.3 billion. And if you look at their expenditures, which are about 1 billion compared to their cash, they have enough money to survive, to fund their business, to expand their production, and survive this tough environment with high interest rates. As you can see, the interest rates are about 5.3%. And those rates affect Rivian, especially their deliveries. They also said in the report the impact of high interest rates. Now, as you know those facts about their fiscal year 2023, you have to ask the question what Rivian will do in 2024, this year. If their production and deliveries go up, then the stock price will go up. Of course, if they also make a profit. But if their deliveries don't go up, then this may be a problem. The stock price may stay low for a longer period or go down even more. As you can see, pre-market, it is expected a decline of 15%. So, if you look at what the management said, you can see that the company expects to produce 57,000 vehicles in 2024, in line with 2023 production. So, if you look at the production from 2023, when they produced about 57.2 thousand vehicles, you can see that it is expected a small decline in their numbers. And this is obvious. Because of high interest rates, people can no longer afford to take a loan to buy a new car, and their deliveries are expected to be flat, or they may go down a little. By the way, this prediction is for their production. Because if you look at their quarterly production, you can see it went up to 17,000, but their quarterly deliveries went down a little to almost 14,000. So they expect to produce 57,000 vehicles, but you also have to see if they can deliver at least 50,000 vehicles. Because if their deliveries keep going down, people no longer buy their cars because of high interest rates of over 5%, or they might go down a little. Nobody knows the answer. But if their deliveries keep going down next quarter, then the stock price will go down. And that will be a problem for you as an investor. Because if you buy now and then the stock price goes down another 50%, that will be quite bad for you. Now, maybe Rivian will rebound. If interest rates go down, let's say to 2% or 1% or maybe 0, then people can afford to buy a new car. Maybe they will choose a Rivian car, and Rivian will report an increase in their production and their deliveries, and maybe they will make a profit, and of course the stock price will go up. But so far, the outlook of 2024, as the management said, is not that great. Their production is expected to be flat for 2024 this year. And now you also have to see if their deliveries remain flat or they will go down even more. Because if they decrease, then the stock price will decline quite a lot. And that's why they also announced a reduction in their workforce of about 10%. Now, this is good because they take care of the costs and they preserve their cash position, which is quite high. As you can see, 9.3 billion in cash. So Rivian will survive this year, even though their deliveries may decline even more from the current level. They will survive because, as I said, they have a lot of cash on hand and they can fund their operations. But if you decide to invest in this company, you have to focus on the future outlook. Not in the short term, what Rivian will do this year, but after 5 years, if Rivian can become profitable. Because if they do, the stock price will rebound from the current level. The market cap may go to 50 billion. That can happen. But only if their deliveries, this is the most important indicator, if the number of deliveries rebounds and keep going up, then Rivian, the stock price of Rivian will rebound. Even though they might not make a profit in the short term, this year or next year. But if the number of deliveries keeps growing, then maybe after 5 years, Rivian will be able to make a profit and the stock price will go up. But so far, for this year 2024, don't expect a huge increase in their numbers. Because as they said, the production for 2024 is expected to be flat, of about 57,000 vehicles. And their deliveries may decline even more. So 2024 won't be a great year for Rivian, and also for investors. However, if you believe in the future of Rivian, that their numbers will rebound, they'll be able to make a profit, then Rivian may be a good opportunity at the current level, but only if they are able to make a profit in the future. So far, they will survive. They have enough cash to fund their operations and expansion. And if you have other questions about this company, then let me know in the comments.